Hello and welcome to episode 21 of the Money Talks. And today we've got a very special guest, but also invited in a very special way because we've got Abhishek Poddar of Plum, who's been nominated to come on the show by Ashish Tulsian of Possessed. And I'm so glad because, when I went through Abhishek's story, this is really a story worth talking about. So welcome to the show, Abhishek.
Hey, thank you so much, Anirudh. Thanks for having me. I didn't know the backstory about the nomination. So thanks, Ashish.
Ashish actually I had asked him a question that which company in your anti portfolio hurts you the most, and his answer was Plum, and he said, and that's how the conversation really started, and in fact, I think I have I run this weekly blog where I nominate three companies, every week that I like, and I think I've nominated Plum there as well. I was like, well, this is serendipity, right? So might as well find out who these founders are. If I like the guys, and I think I should have invested in them. And then if Ashish like the guy and he says this is a company that hurts him from his anti portfolio, it's definitely guys worth talking to.
No, no,
And guess what? The hunch was right. So we're gonna have a very interesting conversation.
no. Thank you so much, Anirudh, for having me.
To all the viewers, guys, I'm telling if there's any questions you want to ask a founder that has spent half his career in as a Silicon Valley founder and half his career now in Bangalore, in India's own version of Silicon Valley, this is the time. So go ahead and put your comments, questions in the comments section, and I'll ask them from Abhishek as we go through the conversation today. So Abhishek, are we ready? I think there's a lot to cover today, so I'm going to get going.
Definitely. Let's go for
So,
it.
Abhishek, you studied at IIT Kanpur, right? And after that, you went to Stanford. Uh, I mean, the usual, IIT and MBA combo that everyone dreams of. But then after that, you started working for McKinsey and Digit. So, what was the role? What was the role you were doing over there at McKinsey, and how long were you there?
Yeah, definitely. Slightly backstory and some correction as well. So I did my IIT and then went to McKinsey. During the IIT times, actually, uh, there were like a stack rank of companies. So to think about that, hey, these are the top 10 companies you should go for. If you get into those, go into these companies. Then these are the next 10 companies. Then McKinsey was one of those companies. I got very, very lucky to get into McKinsey. I never imagined that I would be there. So I just went in there without even knowing what that means, right? I was doing my engineering and then I land up in business consulting. I had no idea of what business consulting is, but I think it was a really good choice for the first real business role, in the sense that from day one I would land up at a client with the CXOs there, trying to figure out how to make changes in their business, right? And I am day one of doing business. These are guys who have been in business for 30 years, 40 years. So huge learning curve right from day one, and you're like thrown into the pool and like, hey, go and learn. So I think the best start I could have had for my career. I think within those 2 years, I realized that hey, consulting is a good start. You learn a lot about how to do business, but I have to do something different. I have to build products. I have to build companies. I can't be an outsider. As a consultant, the challenge is you're limited to just saying, hey, what can be done rather than doing it. And my style is, or my comfort is with actually doing it. So the first startup that I joined was Digit. So this was back in 2009. It was a tech and media startup, a very different kind of company where we were building a number of niche media brands, and Digit was one of those brands. It was a technology brand. Really good experience with the startup again. Built that brand, especially the online brand from scratch up. Made it profitable within the first 2 years of doing the business. But that's when I went on to my B school. So Stanford actually happened after McKinsey and Digit.
Oh,
So
wow.
went on to Stanford in.
Are you part of that? Are you part of that WhatsApp group of all the McKinsey founders?
Yeah, so there are two groups, yeah, and one of them is called a Mafia group. But yes,
I know, because you got three. We got four founders that are in that group today. So we were
Oh wow,
investors in
wow!
that.
No, there's a mafia group, and then there's actually a huge group of these days. There's a huge group of founders from McKinsey as well. So there is a McKinsey founder group as well.
Yeah. So we've got Manish from Purple, uh, Arvind from Kabaddi Adda, we've got Naya from Devi Chakra, and so on and so forth. Lots of these McKinsey founders actually. I mean, I
Yeah.
think
So
there's a different class when it comes to their level of research. I think it's a, because I think McKinsey sort of inculcates that into you, right? Research and good presentation skills, and I can definitely see that there's a huge difference because of that. But do you think that has affected or positively influenced your entrepreneurial style?
yeah, it does. I think see, it gets the basics right from day one. Basics like how do you be really disciplined about things, how can you communicate really well with either either the customers or your team members, or whosoever that person is, right? How do you write really well? And it is, so when I say communication, it's both oral and written communication, right? How do you think? How do you think strategically about building a business? And then how do you actually go deeper into making it happen as well? So I think in a lot of ways, I would say where I am is because I started with a company like McKinsey, which gave the right basics.
And then after you got done with Stanford, right, with your MBA, you briefly joined a startup called Swaylo. What was that a career choice, or was that something like you obviously went from these big, large companies with lots of perks, and then you go to a startup, right? I mean, basically, what it was doing was compared to cloud, from what I understand,
Correct.
and that you were there for a brief time. So, what was that a conscious effort to get into the startup space?
Yeah, so actually that was a very small stint, and that happened while I was at Stanford itself. The idea there was to, so I was very new to Bay Area. That was my first time, literally in the US, and literally in the Bay Area, right? I'd heard a lot about Bay Area, but I had no clue about what that is. So for me, it was just absorbing as much as possible, and one way to absorb that was being at one of the startups. So I did spend a few months at Swaylo. It was very similar to Cloud. Very early stage, we were a team of 10 people. So got a good flavor of all parts of business and building business. But right within the third month, actually, that company got acquired by
Yeah.
Facebook. That was literally a very very short stint. And again, I was doing my masters. I hadn't completed my masters, so I couldn't just move to Facebook. So that stint ended within those 3 months. But again, a really good exposure to how Silicon Valley startup works and how it's different from an Indian startup. When I say Indian startup, 9.9 Media was an Indian startup, but that was back in 2009, right? Where the startup craziness hadn't happened in India. Very, very few people were doing startups. People didn't know about what the Silicon Valley culture is, right? So the startups in India had very similar culture, I would say, to a mid-sized or a large-sized company in India, and not really a startup culture. So
But the
huge
thing is,
difference.
definitely going to talk about that difference because you've actually, if you go through your history, you've actually seen both sides, of that. Because, all right, I mean, so were you at all a part of the whole acquisition talks? How quickly did that happen? Like, I know it was
Yeah, no,
third
I,
month
I
in the
was
space.
not. I was not part of the acquisition talk. I was like I literally joined the company, and I think within a month the acquisition conversation started happening. So I was not the insider into those conversations. I know what happened, but I definitely didn't get the flavor of how the acquisition really happened.
But were you there to pop the champagne though, or was that only done by the founders?
No, no, we did, we did, but it was not a big acquisition as well. It was, I would see, and that's one of the other difference between US and the Silicon Valley and the Indian startup ecosystem, right? So one of the things that happen a lot in Silicon Valley is there are small acquisitions that also happen, and it could be an active hire, or it could be a real product acquisition. And this was an active hire rather than acquisition. So it was a very small exit, nothing big to celebrate. But again, it gives exits to people and the investors, even if they are small, right? And it keeps the ball rolling for the founders. And that's one difference, I think, between US and India. I think India have had a few large unicorns plus exits, but India doesn't see that high frequency small exits that can return money for investors and founders, for example.
I think that is changing. If I look at the last, I mean, we're just doing some tallying for a media article, and I think in the last 3 years we've seen I think almost 80% of our exits in the last 3 years, and not all of them are massive, Oyo style 150 to 300x kind of exits. Many of them have been 4x, 5x. Like we had Super Daily get acquired by Swiggy. We had obviously
Yeah.
Find get acquired by Reliance, and now Floats and all that. So I think the methodology is changing. It's a maturing ecosystem, but it's still pretty young. But you're right. I mean, I don't think it's as frequent as saying, here's a great product, company are working out, let's sell the product, move on. Right? I think Indian founders tend to be, for some reason, very, very too close, too intimate with their product, as if they're not going to build another one in their lifetime.
No, I think it's
So
both the founders and how the large companies think, right? Think of see in the US, who is doing this acquisition? It's the Google and the Apples and the Facebooks of the world, right? And these tech companies have realized that one of the fastest ways to grow is to acquire these products slash talent. But you wouldn't see. I think Reliance is showing that, and you've seen a lot of smaller exits because of Reliance, but apart from that, if you look at the top five companies in India, maybe you'll see 3 or 4 examples of those exits. And if you compare that to US, if you look at those top 5 companies, you would probably see 100 exits.
I mean, we're obviously digressing a little bit, but I think a part of that is also, because most Indian tech companies don't have great market valuation. Right? If you look at the US tech companies, I mean, they dominate. I mean, I think I was looking at some statistic. I think of the overall market, I mean, overall GDP, the tech companies of the US probably are worth more than the GDP of the US at this point.
True.
Right? And in India, tech market caps don't even form. I mean, most of the tech companies are not even in the top 50. Like they're not even the Nifty 50 at this point. Right? Nifty 50 dominated by old economy, and I think that's probably why, because they don't see any kind of a valuation jump. Because if I acquired some revenue, if I acquire that at 10x of revenue, do I get a 30x market
Yeah.
multiple? Right? You're not seeing that. So many of these guys, like you said, are not interested because it doesn't make mathematical sense. Right? The market's going to give you the same value that I acquired the company for. So how does it make sense to acquire the company? But then you left. I mean, you graduated. You started a company called RedSeer, right? And it was a passion project. You're basically renting party supply rentals.
Correct.
And I'm not sure if the idea came from the Swaylo acquisition party, but seems like it was 3 amazing founders, by the way. And we're going to talk about a little bit about the founders. But where did the idea come from? What was the genesis, and where did this come? How long were you there for? I think, a year or so.
Yeah.
But what happened?
I think that would have been an amazing story, which is the idea coming from the acquisition party itself. But no, that was not that. It didn't happen that way. It was basically just from friends observing. In at Stanford itself, we had quite a few friends with small kids, right? These are kids 1 year, 2 year, 3 year old, and we would see them hosting quite a lot of parties, and we spoke to them on, hey, how are you setting up these parties? And we saw a lot of challenges in terms of how they would go about renting stuff for a party. So it actually came from the community, from a lot of conversations with our friends at Stanford. The way this actually, so what we were building at RedSeer was we wanted to build the eBay for rentals, right? You had seen eBay, which was bringing the sellers and buyers together on one single platform. And it was solving for the logistics, solving for discovery, solving for payments. This is back in 2012. We thought the world is now going to evolve to a shared economy space where people would rather prefer sharing rather than buying. And this could be anything and everything in the world, right? I mean, in the US, the two largest rental industries are cars and houses. But beyond those two industries, nothing had really evolved as a large organized rental market. So there were large pockets of rental markets, and party supplies was the third largest market. Actually, if you look at US, in US annually, $20 billion of rentals, party supply rentals happen, but completely fragmented, absolutely fragmented. All non-tech, small mom and pop shops doing that rentals, right? And then you extend that to other industries, be it clothing, be it camping gears. Camping is a huge industry in the US again. You extend it to any industry, any product that you could imagine, and there is a rental industry out there. So our idea was, how do you actually build that eBay for rentals? And we explored a few models. We explored a peer-to-peer rental model, figured out that, hey, the market is not yet there to build that. You need a lot of trust in the market, and very hard to build that trust, at least in the next decade or so. So we evolved that into then a more eBay-like, which is small business to consumer product rental. And within that, we chose party supply as the first vertical to go after. So party supply was just a go-to-market for us, was an entry point, but our goal was to go into all the other verticals.
Interesting. Actually, I evaluated a lot of businesses like that early in the fund. And I thought there really was a business. I mean, what you were talking about 2012, I thought there was a business then in 2018 in the similar space. But again, it is a very tough space, especially in India. Like you said, more than the trust, I think it's also the, we don't really have mathematical models that people understand. Like, it's my acquisition price, my, written down value, and then I have to recover this. If the founder doesn't understand that math, can very quickly lose money here. Right?
Yeah.
That's
India has a second problem, which is people don't appreciate anyone else's property.
True, and not just that. I think they also feel that they always feel like I'm getting gypped, right, in some way or the other, right? So it's always like, I can get this cheaper, I can do this cheaper, and then the EMI model in India, it again competes with that model. So you've got all of that happening, but you put together a pretty awesome team. Abhishek, you, Vivek Goyal, Varun Dodla, all three of you guys. How did you guys meet each other?
Yeah, so Varun actually was one of my classmates at Stanford, MBA classmate. So had known Varun for quite some time. And we were actually, this was an idea that we worked on together right from day zero. We figured out that, hey, this is what we want to build. And then Varun was actually a close friend of Vivek's wife. And that's how we first met Varun, I think, at one of the parties. And we started talking, and he eventually liked what we were thinking and what we were building, and decided to join us as a co-founder. I think we were a pretty amazing team. Actually, Varun is one of the investors in what we are doing right now, and Vivek is again back in India, is building an amazing company called Play Shifu. Very amazing product.
We've done the research on this. He raised over 20 million from Chirute, and Varun's working in a company that just raised 14 million in March. So I guess the powerhouse team, and you obviously raised a ton of money yourself. So powerhouse team that made, hopefully if it had gelled together, would have probably been a unicorn, right?
No, I think so. We did RedSeer for a year and a half. I think we are an amazing team. I think it was just a wrong market to be in. Over time, what we figured out was the unit economics is very hard to make it work. The kind of operations that is required to build and scale this business, and the cost doesn't support the kind of business that we're building. So I think, and I think one thing that we did well was we realized it pretty early on. There are companies that have spent a lot of money after us, and again came to the same conclusion that, hey, it's very hard to build a profitable business. But I think it was a market issue where the amount of logistics that's involved in building a rental business is huge, and especially in the US, where the manpower is expensive, right? If you have to go and pick up stuff from someone, deliver it to someone, again pick it back and deliver it to someone, you are looking at a huge logistics cost.
And it's very interesting the way you quantified all of this, right? So I'm guessing you're somebody that collects and maintains data at a very minute level.
Yes. So I am a Marwadi. So, and I think that's something that I've been nurtured right from day one, which is whatever you're
Was
building.
I audible?
Yes, yes, Anirudh, I can hear you. So I think back to your question. So building a profitable business is something that's ingrained in any Marwadi, right? What you're doing, you're always looking at, hey, can I build this into a profitable business? So even before I start thinking of any business or any business model, I look at the numbers very closely. And two things that I look at is one is, hey, how large it can become. Don't want to build something that is a nice to have and has a very small market to it. And two, then can it be profitable, right? Is the unit economics going to work out? It may not work out in the short term, but I should have very clear picture into that. Hey, maybe a year from now or 5 years from now, and by doing these three things, this is going to be a profitable business. If I don't have that clear answer, then very hard for me to give my full faith into that, into what I'm building.
So, and I think that collection of data, like you just talked about, is so important, because at the end of the day, that really, like you said, Marwadis just have this thing that we need to see accounts, we need to see numbers every single day or every single week, and that actually inculcates a very good habit, because you exactly know what's going on in the business. You look at the business as like a car that's just throwing out all these numbers. You got to figure them out and make sure, what does the car need next, right? And what do I need to accelerate or press the brake or change the gears for? And
Yes,
I think that's
I think sometimes it happens to our disadvantage as well. I think sometimes we get too focused on the numbers and forget looking at the big picture. So sometimes it hurts us as well in terms of building a large company, but a lot of times it does help.
I think it helps you more often than not. I think there's obviously innovation in those numbers to look into. But so, how's your relationship now with Vivek? I know Varun invested in Plum, but how's do you guys exchange a lot of ideas? Because Varun's still in the valley and working in an amazing company as chief architect.
Yeah, no, both of them are really, really good friends. Vivek is actually back in Bangalore. Vivek came back to Bangalore a year before me, and he kept pulling me back to Bangalore. So really good friend. We exchange a lot of ideas, both on what we are doing. Heavy user of his product as well. But end of day, yeah, really, really good friends with both of them. I think it was just that the idea didn't work out, and then he was someone who wanted to start his next venture immediately, right after that, when it didn't work out. So he moved back to India. I wasn't ready to move back to India, so he started something on his own at that time.
Because you were about to do the dream, Abhishek. You were about to go work for Google, and
Yeah,
you worked there for 3 years.
yeah,
And
I had a loan to pay.
you had a loan to pay. Well, if you go to Stanford, you're definitely going to have some loans to pay. But that being said, I mean, what was that like? How did you get into Google? By the way,
No, so that was actually Google happened right when I was at Stanford. I had done a few interviews during that time and had a few offers, including Google. But when we were doing RedSeer, we had put that off. That hey, we are building our own company. Eventually, when we figured out that hey, this is not working out, that's when I thought, hey, between all the options that I have, maybe it's a good time to go and work at a company like Google. I hadn't done a formal product role. I had worked at a startup, and then I was building my own startup, and it was all self-learning. I had never learned from a mentor or folks that who have done product, who have built product for decades, right? So that was the primary reason. I think again, like I said about McKinsey, right? McKinsey gave that. McKinsey was one of the best places to inculcate how to run a business. I think Google was one of the best places to inculcate how to build a product, how to build in engineering. I think that was one of the best decisions that I could have taken, and the learning that I had, especially in terms of product and engineering, is immense. It's
You were working on the
really
Google My
different.
Business project, developed and were part of the team that launched Google My Business. Tell us a little bit about that.
Yeah,
That's the
so
product.
Google My Business was essentially a product for small and medium businesses to get online on Google. And when I say get online, it means having a presence on Google Search, having a presence on Google Maps. At that time, this was back in 2013, we had a big product called Google Plus that we were trying to push. So having a presence on Google Plus. So it was the entry point for, think of your Kirana shop, think of your beauty parlor, right? Or a restaurant. How to help these businesses get a solid presence on Google. And then eventually, the reason we were building this product was also to monetize. And what Google had realized was, hey, Google has built a very large market when it comes to enterprises in terms of the ads, right? Google was the leader in terms of enterprise ads, but the next big opportunity was SMBs and to monetize the SMBs. So this was the entry point into the SMBs, which is build an engagement with them and then help them run ads on Google. This was a product that we launched back in early 2014, and I was looking at the so this was a team that was led by there's a guy called Kasar Younes. He runs a company called Applied Intuition. His company was the fastest to become a unicorn, I think. And I don't know if it's the fastest, but definitely in the enterprise world. He just raised a round at $1.1 billion. But again, he was a fantastic guy. And one of the reasons that I joined Google was because of him. So I had met Kasar before joining Google. His team was acquired by Google right before that, but he was running within Google. He was running a very small team, more like a startup, but with the context of Google, with all the power of Google. So I thought this is a good opportunity to work with someone like Kasar, work in a very startup kind of environment, and get all the goodness of richness of Google.
Did you imagine that when you would go to to the US for the first time, be around Silicon Valley, and then you would have Facebook, Google, entrepreneurial experience, acquisition, people making unicorn products, all of that within 5 or 6 years of getting there?
Yeah, no, I think a lot of things were. See, if you are in the right place at the right time, a lot of these things just happen around you, right? And you have no control. I don't think I had any control over that acquisition happening. I didn't have any control over Kasser doing a unicorn, right? It just happens. I think what's important is you keep doing the right things. If you're doing the right things, if you're working with the right people, eventually the right things will happen around you as well. But I would say, yeah, most of these things were not in my control.
But it's almost like, people say you want to go live the Hollywood life. This would be like go live the startup life, right? And be in the Bay Area, and next thing every you throw a stone and there's a founder getting acquired, or a founder, building a unicorn over there. But then you were also part of the Google Pay platform, right? Which now is taking over India. 6 years later, but it's the rage in India today. The Google Pay platform. What was the product? What were you guys trying to build?
Yeah, so this was our second attempt at payments. A bit of background is back in 2011, Google had tried something called Google Wallet, and that didn't work out. That didn't scale up. And then in 2014, Apple had launched Apple Pay, and that started picking up. And one of the reasons that started picking up was Apple is really good when it comes to marketing a product. Apple Pay specifically was a completely new way of making payments. And if you look at payments, it takes decades to change a habit of someone of how to pay. But with the might of Apple, that started happening. The kind of marketing that Apple did, it started happening. And that's when Google said, hey, we should put a second attempt to making a payments product. And that's the team that I joined. It was called Android Pay at that time. And Google is really good with building 10 different product names for the same product. So we changed from Google Wallet to Android Pay, and it's now called Google Pay. But it was called Android Pay when we were building it. And the part of product that I was handling was the in-store payments experience, which was the NFC-based tap and pay payments. Again, one of the hardest products to be built, I would say, in terms of the engineering. Imagine a product. If you want to make a payment at a store, right, when you're doing a very simple tap, there are at least 10 companies that is involved in that 500 milliseconds of transaction.
Yep.
There is a device OEM, there is a OS that is playing out, there is an app which is Android Pay. Then there are two banks that are involved. There is a Visa or an Amex or a Mastercard that is involved, and then there are different payment rails acquirers that are involved, right? So, how do you, in that context, how do you build a product that can talk to both the hardware and the software layer, and talk to these 10 different companies at the same time, and make sure that your product works 99.99999% times? Because if your product doesn't have that kind of reliability, if your product fails, let's say if you try to make a payment and it fails 1 in 100 times, you would never ever try it again, because you'll be really humiliated, right? You're basically holding up you're waiting in the queue, you're making 10 people wait behind you. If you fail once, you would never ever give a shot, right? So that was the kind of challenge that we had. So one of the most complicated products to build. But I think in the US, it has started seeing a lot of traction. But India product is actually quite different. The product that you're seeing in India was a completely different initiative. It was started in India by the India team, and the kind of scale it picked up is amazing. We never expected that. Whenever we discussed at Google that, hey, we should build a payments product for India, this was back in 2014, we would never prioritize India. We would think that, hey, India doesn't have any potential for a product like this. And this was a completely different team in India that came up with Google Pay. And I think a lot of that was driven because of what was happening in the Indian market at that time, UPI coming in. But I would say that's a completely different and amazing story.
Yeah, it was more 2016, 17. I think this was all happening behind the scenes. I think many people didn't know what was really going on. But now when I read reports about how UPI wants, now other countries want to adopt UPI there because it's such a simple product. It's a proud moment, right? I mean, it's almost a government-backed product that will now get exported across the world. So, but do you feel sometimes when you use Google Pay, like I was part of this. Some part of this is it, some part of this. Can you hear me?
Hey, I can.
Yeah. No. So good. So you were with Google now. What were your takeaways? When I visited the Google campus to a personal connect, I was truly amazed. I came back with so many things that I implemented back when I came home to Artha. But for you, what were some of the takeaways you took from Google's culture?
Yeah, I would say it's a very different culture than what I'd ever seen anywhere else. It's a culture which is very engineering driven. At Google, engineers are the god. They are the decision makers in a very true sense. And it's because of who the company was started with, right? It was Larry and Sergey who started the company, who are engineers at heart. So it's one of the very, very few companies which is driven by engineering. And there is good and bad to it, right? The good is you are solving the hardest problems, because engineers don't want to work on something that's very trivial in nature. So if you look at the most complicated engineering problems, you can expect Google to solve it, be it the search engine of the world or the self-driving car of the world. The bad part is that a lot of times to build a large business, you need a lot of other components, right? Be it operations, be it marketing, and those are things that I would say Google is not good at, because of which a lot of other products, like let's say Google Shopping, didn't work out. Google tried many attempts at e-commerce, never ever worked out. Google tried many attempts at hardware, never ever worked out, right? So it's a different culture, but I think the good part of the engineering culture is, and again, you can say, hey, the companies like Google, there are companies like Apple, right? But these are two very different companies at the heart. Google is a very, very bottom-up culture company where the junior most engineer can come up with an idea and actually make it happen, try it out as a product, and actually launch it in the market. Versus Apple, which is very, very top down. And I think over time, I realized that hey, there is a culture that I associate more with, which is a bottoms up culture, which is Google rather than Apple. So if I would ever work at a company, if I would ever want to build a company, I would want to build a Google rather than an Apple.
And that's, I think that's what took you next. The next destination for your career at that time was HyperTrack, which is a live location platform in the cloud offering developer tools for mobile application developers in companies of all sizes worldwide. Right, the toolset contained iOS, Android SDKs to generate live location data that is then consumed through webhooks, APIs, or visual experiences on the web. The company raised 8.5 million from a number of very marquee funds, Nexus, Founders Fund. It had Dipinder from Zomato also as an angel investor. How did this, this is the company back in Bangalore, I'm guessing. And
Yeah,
so how did this happen?
yeah, no, very interesting story. So this was actually this was an idea originally by Kashyap. Kashyap is again one of the serial founders, but I had known Kashyap for last 10 years. Very interestingly, I was a customer of Kashyap when I was at 9.9 Media, and Kashyap was running his company called Chapati Bazaar. So I had known Kashyap for the last 10 years, and he started imagining what he could build around live location. This was back in end of 2015, and he was in the Bay Area. And that's when we were catching up, and a lot of things clicked, and we decided that, hey, I should come in and I should pack my bags, move to India to build HyperTrack with him. One of the things that I think two things that excited me. One, because of Google My Business. So Google My Business was actually a part of Google Maps product. We were within a Google Maps team. So I had a lot of context about building mapping products and building live location products, or location products, not live location products. So when Kashyap described what he was building, I had context of what can be built and why Google can't build it. And this was one of the questions that everyone would ask. Hey, doesn't Google already provide that? Or hey, can't Google get this maybe in a few months down the line? And I had a very strong conviction that hey, Google can't. And I can. There's a separate topic to discuss. But I had a very strong conviction that hey, Google can't. So that eventually led to moving back. We started in Delhi actually. We were in Delhi for actually a year and a half. Then we moved to Bangalore for the next year and a half. But now the entire team has actually moved to the US, and HyperTrack is completely being built out of the US.
The US now, well, it's gone back.
Yes.
Interesting.
Yes.
And you actually joined as you weren't a co-founder. You joined the company and then were elevated to the position of co-founder, which is very interesting. Not a lot of Indian companies are known to do that. But what was it that you offered that two founders who had already started the company then elevated you to the co-founder position?
Yeah, I think it was. I didn't give a lot of weightage to that. I think the way we were working together, Kashyap, me, and Tapan at that time, we were all working like co-founders. But definitely, this was originally Kashyap and Tapan's idea. So on the paper, it was not there was no position called co-founder. But in a couple of years, this was something again that Kashyap brought in that, hey, given what you're doing and you have been, you joined in a few months later, but you have been a co-founder to us. So we should rather call you co-founder. So I don't think it was a big change. But I think the other reason it happened is also because Kashyap has built a lot of his companies in the US. So he knows the US culture, and he knows that hey, it takes a very long time to build a company, right? So in that long journey, a few months here and there doesn't matter. So he always thought of folks like co-founder, and he thought that we should formalize it.
So in your opinion, and for the founders that are listening in, right, if you're trying trying to elevate somebody in your team from the position of, let's say a senior employee or a critical employee to co-founder, what are the three things that you should be looking for in that person?
Yeah, I would say, see, number one, you have to be really, uh, as a founder, you have to be really clear why you are doing this, right? Are you really thinking of that person as a co-founder? And if the answer to that is yes, then and only then you should do it. If you are doing that for some other hidden agenda, right? That hey, you want to retain that person, you want to or you want that person to get into an ownership mindset. That person doesn't have that ownership mindset, but you want to drive that person to have that ownership mindset. I think those are wrong reasons to do that. So my first advice would be that do it only if you truly believe that person is already a co-founder for you, right? And that's the working relationship that you have. And if you believe that, then I would say there is nothing, no other checklist in my mind, right? There are no three things. Right? If you're working with that person as a co-founder, and that person is putting his efforts into the company and building that company as a co-founder, then you better call that person a co-founder. I think there is nothing that should stop you.
And I think it's very important to also, it shows a lot of maturity in the founding team. And for me as an investor, if I see somebody saying, you know what, I think this guy deserves it, this person, this female deserves this because she's putting that extra bit of effort, right, that nobody else is currently putting in, that I believe is co-founder material. When you see that kind of maturity in the founders, you know that they're not going to try to hoard all of it for themselves. Right? They're more than happy to give it out. And it's so many times when you give those things out, then you get everything back in return.
Yeah,
so,
but I would say the most important is you have to be very, very honest to yourself. That's why you are doing this. I have seen a lot of people doing it for hidden agenda. Never ever do that because that won't work out.
it comes out in the open, right?
Correct.
And so after being a co-founder, I mean, HyperTrack is still, I think, an operating company in the US. What made you leave that and you completely like jumped, entire oceans at this point to health insurance and health tech? So we'll get into Plum, but before we get there, what was it that led to the change?
Yeah, I think that was a big learning for us. So we were always building HyperTrack for the US market. I mean, for the global market, but US was the largest market. But we had this false belief that, hey, we can build this out of India. One of the learnings for us was, hey, if you are building a product that already exists in the US and you are doing it faster, better, cheaper, then you can build it in India because you know what you're building. You are just building, you're taking some of the advantages of India and building it faster, better, cheaper, right? HyperTrack was a company or a product that we are building which didn't exist globally. And we were trying to imagine, hey, what does a customer sitting in the Bay Area think of Instacart, think of Uber, right? Think of DoorDash and the developers in those companies. What would those people need? And we were doing that sitting out of Delhi or Bangalore. I think over years we realized that hey, it's almost next to impossible to do that. We kept running around in circles. We kept getting a lot of traction in India and realized that hey, India is not a large market for what we are building. The US is a large market, and we were never able to get that traction in the US. After a few attempts, a few failed attempts, we decided that hey, we have to take a hard call and build this out of US. And I think once we have figured out the product market fit, then we can imagine again, let's say, building a smallish engineering team in India if you have to scale it up. But the initial traction has to come sitting out of the US. So that's when we decided to move the entire team and the company to the US. And in that scheme of things, I had personally done a lot of move from India to US to India. And that's when I had to take a very hard call, something that I didn't want to, but I had to take a hard call to not make my family move back to US, completely dismantle everything. I had moved back to India to build things in India, to build teams in India. So that's when I decided that, hey, I'll move on to more of an advisory role. So back in mid of 2019, I stopped working full time and moved into more of a advisory role for a year or so. So that's how the transition outside HyperTrack happened.
Hoping you held on to all your ESOPs. I think that company is going to do very well. I, in fact, found something very interesting on the internet. I believe you developed a patent for systems and methods for receiving sensor data from a mobile device.
Yes. So we were doing very interesting stuff at HyperTrack. As I said, right, it's these were uh, technological problems that were not solved before, and one of the hardest engineering problems that we were trying to solve. And the patent was around how do you get real time location from a mobile device, let's say a device of an Uber driver or a DoorDash delivery boy, uh, to the device of the end customer that wants to live track the delivery or the driver. How do you get that real-time location and accurate location while conserving the battery on the device?
Basically, basically, what you see on my Swiggy when I'm ordering from Swiggy or on an Uber, the fact that I can track where that guy is, that's the patent that you filed and received.
Correct. So that's the I would say not exactly the whole. The patent is not exactly that, but the patent is how do you do that in the most efficient way, which is how do you transmit location from one device to the cloud in the most efficient and a real time manner.
Wow, that is amazing. And then you obviously shifted gears, and then you went on to do Plum, right? So what? So now that we've come to this journey, we've come to this juncture, right? Quick question that I wanted to ask you, like, what does Plum do in 3 sentences or less?
Yeah, definitely. So with Plum, we are making health insurance and group health insurance accessible and affordable for small businesses and startups. Think of companies as small as 5 employees, 7 employees, or as big as 500 employees. These companies right now don't have access to a comprehensive but an affordable health insurance, and very a lot of different reasons of how the market has evolved in India. But we are trying to reimagine the whole health insurance stack in India for the corporates.
So this is the question that didn't come with my team came with this question, because looking at your history, all the ventures are so different, right? Party Supplies, Cloud Competitor, HyperTrack, and now Plum. And the question they had is, how do you get these ideas for these ventures?
Yeah, no, that's a very interesting question. I think for me personally, it's the see what we learn over time is how to build a team, right? How to build a product, and to me, industry is not really an expertise that's hard to gain, right? You can basically talk to people, you can work for a few months, and you can easily learn how the industry works. So to me, the excitement, the learning is about how to build a company rather than becoming an expert in a specific domain. So whenever I go about building a new business, to me, then it is about, if I restrict myself to what I have done previously, then it's a very narrow range of things that I could do, right? And to me, why should I put that constraint? Because learning about a new industry shouldn't be that tough. So when we started building or when we started thinking about Plum, and this is along with Saurabh, we that's one thing where we were very aligned that, hey, actually going and learning about a new industry is it's a very easy task for both of us, and we should be able to do that. And let's think with an open mind about what are some of the largest problems that we have seen in our lives, that we have heard from our friends or colleagues, and let's go and solve that.
And how did you meet your co-founder, sort of?
Yeah, very interesting. So this was again through a mutual friend. This is back in mid 2019 when I was about to leave HyperTrack. I was already imagining what I wanted to build and talking to a lot of people. So one of the folks heard very similar idea from both me and Saurabh. And he said, "Hey, you guys should connect. You are talking. Looks like you're building very similar things. Maybe you can exchange ideas." So that's how we met, just over coffee to exchange ideas. And one thing led to another. We spent, I would say, a good 4 to 5 months dating, figuring out, hey, if we should build things together. And I think over those few months, we built a huge confidence that, hey, what we bring to the table and the way we want to build this has so much of alignment that, hey, we should actually build this together. But I think one of the things that also clicked was we had very similar ideas in our mind of what to build.
My apologies. I keep getting bumped off. But so yeah. Sorry, you were talking. Where were we? Where were you?
Yeah, I just gave a quick context on how I met Saurabh and how we decided to do this together, to build Plum together.
So this time, obviously you had a very little. Because otherwise, all your co-founders, you had some sort of an association for a longer period of time. But this time it was very quick. You only met the guy. You don't really know him from ages ago. But what was the three things that you found in him that you were like, you know what, this guy is my co-founder. I'm going to build Plum for the next 10 years with this guy.
Yeah, no, definitely. And I think one of the learnings for me was also from these experiences, right, of what works and what doesn't work in our co-founders. So, and that's something that Saurabh was also bringing. Saurabh has done his startups as well, and he was very clear on things to look in the co-founder. So we actually spent a good 5 to 6 months dating before finally making a decision. It wasn't a 1 day or a 1 month kind of decision. It took a good amount of time. In terms, going back to your question, what are the things that we looked at? I think number one was very, I would say, alignment in terms of how we would build a company, in terms of values that we want to bring in to building the company. And that was very important because, see, end of the day, everything else would change. Maybe what you're building would change, your customers would change, your product that you're building is not working out. The values, if they match, then you would come up with the next best thing that you could build together, right? If you have a clarity of why Saurabh is doing this and why Abhishek is doing this, right? If you have that clarity. So to us and to both of us, that was the first thing that we talked about. And that was, I would say, there was a topic where we spent a lot of time on in our subsequent conversations as well. Number two was having that conviction on what you want to build. It has to come on your own. If one co-founder is trying to build that conviction in the second co-founder, that makes it really hard because maybe after a few let's say after a few losses or in the time of hardship, that conviction can very easily go away in that second co-founder because it was an acquired conviction rather than your own conviction. And to us, one of the things that clicked, and that was the reason we met each other, was that we had very similar ideas. And this guy said, "Hey, you have very similar ideas, and you should talk." Right? So we had built that conviction on our own and then met each other. And number three was, and this was very important to me personally, which is humility in someone that I work with. I have seen two kinds of co-founders, both in the US and India, and both work really well, right? There's no right or wrong, but there are founders who I would say think of Steve Jobs, right? He's a perfect example of someone who may not have the humility, right? But he built a excellent, a very large company, right? But he's not a person that I would want to build a company with. I would rather build a company with someone like, I would say, Larry or Sergey, right? Who are very, very humble. So to me, that humility was very important. And again, that's something that I saw in someone like Saurabh, again, who has done fantastic work. He has built a company, sold his company to Freshworks. But again, he was a person who was very, very humble.
Audible? Yeah. So but you are starting a company in an area that you had very little experience in, right? And so what are the challenges of this approach? Because typically As investors, we want to know, hey, listen, how long have you been in this area? What is your experience? Insurance you haven't done. I mean, you're not an actuary. You don't really, I mean, it's not a space that you understand. So what are the challenges of the approach when you say, in 19, in the middle of 2020, a year ago, you decided, I'm going to build this thing called Plum, and then you went for it. But what are the challenges of the approach, and how do you overcome that?
Yeah, I would say we actually saw it as an advantage. See, if you look at insurance, last 20 years, there has been very limited innovation. A lot of insurance companies that got started were by folks who had a deep experience in insurance. But the challenge with that is that insurance is such a old school business that you don't challenge how things are done. You just assume that, hey, this is how underwriting has to be done, or hey, this is how, let's say, a policy has to be issued, or a certain claims process has to happen. So for us, for Saurabh and me, actually, that was one of the strengths that we wanted to build, and this was something that Saurabh had brought up very early on. That, hey, this will be our competitive advantage, which is, hey, we are two folks who are outside the industry, and we can go and ask very dumb questions to anyone and everyone. We can go and challenge each and every assumptions, right? So, and this happened through our life cycle, wherein we would go to we would go to an insurance partner and ask very dumb questions that, hey, why does it take 5 days to give a pricing? Why does it take 10 days to issue a policy? Why does it take 2 hours to get a claims done, right? Why can't we do things in real time? We would hear answers that, hey, it's impossible, but if you keep peeling the onion, right? If you keep asking the 10 whys, these guys again would start thinking, yeah, maybe these guys are saying the right thing and it is possible. And we started seeing some of that. So to us, not having that insurance industry experience was a huge advantage. Some of the challenges, there are definitely some of the challenges, and we are basically building a team, including a leadership team that brings in that industry experience to the company. But to us, we actually take that as an advantage rather than as a deterrent.
That's it's a very mature approach. You've actually quantified saying, okay, this is because I don't come from the industry. I have a fresh perspective on the industry. And what I don't know, I'm going to ask enough whys to figure out why I don't. Very, very interesting approach. So who are your investors? So the ones that everybody knows.
Yeah, no, we raised a small seed round when we started the company. This was we had an excellent investor, Incubate Fund, who is one of the largest seed investor out of Japan, but have a small fund in India as well. And then we had a bunch of angels, including Game Capital, Traction Labs, my ex co-founder Varun, and a few other angels as well.
Interesting. And now COVID-19 completely changed the talk for the first time, right? Where we talked about how COVID completely changed the paradigm on the health of your company, right? Now the health of your company is as strong as the weakest employees or the weakest immunity of an employee, right? And completely changing the paradigm. How has COVID-19 accelerated your business?
No, I think we got really lucky to be in the right place at the right time, and this is one of the things that that has to happen with any startup, right? You will do 99 right things while building your company, but you always need a bit of luck, and I think that luck. I know there is a lot of horror stories around COVID, but we were very lucky to be on the right side at the right time. I think one of the things with COVID is, or I would say two things that have happened with COVID. One is there is just a general awareness that has been built around importance of health insurance. So any general public that you talk to, right, you talk to your family members, and they would now understand that the hospital expenses can be really high. And it will, no matter how much I have as my balance, it can really hurt my pockets, right? So they understand the impact of health insurance. So that's number one. And what that has triggered is now they have started going and talking to their companies, to their employers, that, hey, health insurance is one of those important things. And if you are not giving it to me, that's something that you should consider, right? So now the companies have started thinking about, hey, we should really think about our employees and give them health insurance. And especially if these companies are now asking employees to come back to the office, right? Which means they are asking the employees to risk their life with respect to COVID, then it becomes much more important to provide them with some financial security of health insurance. So eventually what we are seeing is, traditionally, if you think of health insurance, it was always considered a push product, but we are now starting to see health insurance becoming a pull. And we right now have a few hundred corporate customers, corporates that are using Plum. 100% of them have been a pull customer, which means they discovered Plum or heard about Plum, they signed up and they started using Plum, right? And that's a place or that's a product or a company that you want to build where you see a market pull rather than you going and pushing a product.
So Abhishek, let me try adding maybe a couple more hundred more founders to your couple of hundred founders you already are backing. So if a founder today wants to reach out to you and say, you know what, I want to offer health insurance to my employees, I want to, I want you to build me a customized proposal, how can they reach out to you?
No, definitely. The best would be to just go to plumhq.com and you can customize your own plan. And that's the product that we are building, which is we are making it really, really easy for founders or the HR heads to go and customize your own insurance within 60 seconds and get a real-time pricing as well. And then again, if you need help on top of that customization, you can always reach out to me. My email ID is abhishek@plumhq.com. Always happy to help any co-founders out there.
Great, guys. So you guys heard it here first. If you're looking for health insurance for your employees, and I think it is an extremely important, like I think when you talk about push or pull, I think it's also become a need to have kind of a service, right? That's it. That's the place to go. In fact, we have a very interesting question before we move on. Why is Plum called Plum?
Yeah, because we couldn't get apple, so Plum was the next best fruit. Yeah, I think that's that's a challenge with this was like this was a name that we decided, like I think at 12 in the midnight or 12:30 in the night, which is we're trying to figure out, hey, what all URLs are available, and we're thinking of some themes and fruit and vegetables. Where one of the themes that we decided, you see a lot of companies like Carrot HR. Kind of companies in the US. So we decided, hey, we'll try with fruit names. Of course, Apple is not available. We tried Plum, and we tried a few, I would say, prefixes and suffixes around Plum, and we got that, and we decided Plum. So I would say not a scientific choice around that. Just something that we were able to make it happen.
Wow, that is some story. One of the days when you guys are maybe ringing the bell at the BSC for taking the company public, it'll be very interesting to hear why it was called Plum.
Yeah, I hope they don't they get the right team of Plum, because there are like 10 companies called Plum out there. And when one of the media articles recently, I saw a different Plum team being pictured rather than us. So that's one of the things that we never imagined, that, hey, you should actually use a name that is not that common as Plum.
No, I face that problem a lot, in fact, because Artha, I thought I found a very unique name, but now there's a couple of people who've got a very, very similar sounding name. So we get a lot of fan mail, which is not our fan mail, somebody else's fan mail, and I don't mean fan mail. So, but so before we move on to the last round, which is the rapid fire questions, quick question: are you hiring?
We are growing really fast, and we are hiring. We have to build a team. We have a very small team of 15 people right now, and we're still building that founding team that would take Plum to the next level. When I say next level, we want to grow to 10,000 companies in the next year or so, right? So we are looking at 100x kind of growth. So we are hiring for, I would say we are hiring for guys who can hustle, right? And hustle in terms of growth, hustle in terms of sales, hustle in terms of engineering and building the product, hustle in terms of designing. So we are looking for people with all dimensions, but we're looking for folks who can hustle.
Great guys. So anyone of you guys listening in looking for a job, best place, go to join at plumhq.com. And that's a place where a fast growing company with amazing founders like Abhishek are out there hiring. So I would just join them even for an internship just to get some more of this gold dust that I can get
Can we really
from.
get you?
Can you get me, dude?
Can we really
I'm
get
in.
you?
I'm in, but you'll have to convince the rest of the team of what's going to happen once I'm gone. But Abhishek, it's a great conversation so far. I know we've got about 10 minutes. We're already 5 minutes over, so I'm going to take you quickly through rapid fire, and then we'll take any audience questions right towards the end. So you know the rapid fire rules. I've not shown you this question, so you've got about 11 questions. I'm going to ask you very quickly. Whatever first comes to mind, and hopefully the internet gods will let me ask the question without getting cut. So whatever first comes to mind, answer that right away. All right.
Perfect.
Okay. First question. It's the Peter Thiel question. One thing that you know to be true, but very few people agree with you on it.
That insurance can be built by an outsider.
Wow, that's a good one, and you actually proven that. One piece of advice to founders about fundraising.
One piece of advice. I would say look for VCs, look for investors who have patience when you are early in the game, and then look for VCs who wouldn't meddle in when you are late in the game.
Hi, Abhishek.
Hey.
So, who is your favorite superhero and why?
I would say Iron Man. Yeah, why? I would say because he's probably the only superhero who looks real. I can relate to him. I think it is possible, humanly possible. All the other superheroes are very imaginary, not real world.
So it's very interesting, and I think we've asked this question now to 6 founders, if I'm not wrong. Six founders, and 6 out of 6 have said Iron Man. We asked this question to 2 investors, and they both said different people. One of them. So one of them said Batman, and the other one said me, which was really odd. I mean, it was very. I mean, the guy was sort of a mentor to me, and him saying that was very very emotional at that time. But it's very interesting. Most, I mean, 6 out of 6 at this point have said that Iron Man is their favorite superhero. So there's definitely something going on between Iron Man and founders out there. So next question, I think you've sort of answered this before, but scaling before profitability, profitability before scaling.
Yeah, I would say I'm thinking of profitability from day one, but I would take actions to scale first and then bring business to profitability. But I will always have profitability back in my mind. Always have numbers back in my mind to figure out that hey, whatever I'm doing, I can make it profitable. If I don't have that answer, then I won't scale.
And it's so true, because if you don't know whether you're profitable and you're scaling, and if you're losing money, you're just scaling the losses, right? And
Correct.
that's definitely not something that any Marwadi worth his weight in salt is going to do. If you could pick the brain of one person for 24 hours, ask them anything you want, who would it be?
Yeah, I would, because we discussed Iron Man, I would say Elon Musk, because he's a person, again, I mean, if I have to put a real person behind Iron Man, right, then I would say Elon Musk. And he has been doing amazing things, right? That guy is a genius. That guy thinks out of the box and then also makes it happen. You see guys who are either geniuses but cannot make it happen, or guys who will use someone else's genius but will make it happen. He's a combination of both of that.
In fact, I just I think yesterday we realized 5 years ago Tesla was one backseat, and look at where it is today, right? And you're launching things to the moon, and you're talking about that. So you're so right. I mean, he's one of those guys that you really want to just sit and be like, okay, I have questions to ask. Like, how did you think of this moonshot and make it happen? Amazing. One thing you would like to change about the Indian startup ecosystem?
Yeah, I would say be humble. I think that's something that I learned a bit from the US, where you would see amazing founders, but very, very down to the earth. In India, this is very, very new, where startups are getting successful. So I think we as founders have to learn how to be humble and stay humble. And that's how we can make it sustainable, right? If you start losing that humility, you start making wrong decisions around yourself, and you start getting wrong people as well around you over time.
You're talking more in terms of I'm guessing you're talking about the founder lesson.
The founders, yes.
It applies to investors too. I'm not in no way saying that doesn't apply to us. So I mean, I think if you're humble, you'll be a student of the game. The day you think you're the master of the game, the market will teach you who the master really is, which is always the market.
Correct.
What is your typical morning like, Abhishek? What's the first 5 things you do in the morning?
Oh, first thing. So I now have a 9 months old. I think the first hour or so is just spent with the kiddo, taking care of her and doing the normal routine for her, including making her bath, etc. So very different. If you had asked me 9 months ago, very different answer. Now a very different answer.
well, I'm glad that the lockdown actually has worked out very well for you in that sense. You got born a couple of months later, lockdown.
No, very true. Again, got really lucky. I think perfectly timed that all of that happened right before the lockdown.
When do you get your best work done now? Morning? I'm guessing it's night now because morning.
Late in the night. Yeah, very late. My most productive time will be like 11 p.m. to 1 a.m.
Guys, if you're going to be reaching out to this email, reach out after 10 p.m. at night. That's what Abhishek is just telling you.
No, that is true. I've seen that if someone has reached out at be it WhatsApp, be it email, if someone has reached out at 11, I've seen the response rate to be really high. And if it's like 11 in the morning, I've missed a lot of emails. So what you said is very, very right.
3 books you would recommend to founders?
3 books. One would be Hard Things About Hard Things. Second is Deep Work. And the third one I would say is The Monk Who Sold His Ferrari.
Oh, wow. That's a book I just finished, by the way, just recently. So I heard the audiobook. Very, very interesting. Very, like almost to the level of The Alchemist, I felt. That book.
No, very different. Again, very important for founders, I would say, to stay real. There's so much happening around you that you have to stay grounded. And I think, between these 3 books, I think these are 3 very different genres of book in itself, right? One is how to make hard decisions. Second is how to be efficient, and third is just to how to stay sane.
Yeah, how to stay sane with in the middle of the strongest tornado we've ever seen, right? And everything just around you. Great. And what is a blog that you're following right now?
What's the blog that I'm following right now? Yeah, I still follow PG's Paul Graham's blog a lot. I think he writes one of the best essays. But apart from that, not a avid reader of one specific blog, I would say. If I have to pick one blog that I read continuously, I would say PG's blog.
PG's blog. Great. So with that, Abhishek, we come to the end of Rapid Fire. And I'm super glad. I mean, I think we had some really excellent answers. And another founder who added on to the tally of Iron Man fans that we have, the Money Talks. But we've got one question before we end for the night.
Yeah, you have to keep that Iron Man tally on your Twitter somewhere. I want to see how that goes.
Tanisha and Shravan, why don't you guys? I think that's we should actually have a thing that's going to sting like Iron Man. With maybe the Iron Man face that just gets one more number added. So can we make that happen? That's an excellent suggestion, by the way, Abhishek. I'll ask you one question, one audience question we'll take over here. Jayesh Singhania, he said, what did you pitch to your first 10 to 15 customers and how long did it take to close those deals?
Yeah, the pitch to the first few customers was how we are making the life of your employees better by getting the right kind of health insurance. It took the first customer took a good 3 months. We started the idea or the product back in November, and the first customer we got in end of December, early Jan. So it took us good 2 to 3 months. The first 15 customers took us a good 5 to 6 months. So it took a lot of time to get the first few customers, but it was also because of the we were learning the industry, right? We didn't understand insurance at all, so there was a lot of room for us to cover in terms of understanding the industry and building the product.
And how long did the last 15 customers take to
close? 1 week.
1 week. So 5 months for the first 15, and then good. That's the truth. Actually, it's called momentum. I've been in,
Correct.
As somebody in sales, it's all about momentum. And now I'm sure there'll be a day where there'll be 15 customers a day. You'll be like, we just closed 15 customers yesterday, and we 15 customers in an hour. And you see this every single time. Just keep building on this, Abhishek. So with this, Abhishek, thank you so much for your time. I know we ran about 15 minutes over than what I promised, but I think we've had an excellent session. So much to learn, from a founder who's obviously been on both sides of the oceans and has got some very interesting perspective. We've done so many different things in life that I can tell you that Plum is going to do very well, just because of the tenacity of the experience that you've received. So any final thoughts for the founders that we have listening in?
Yeah, I would say chase the right metrics would be the only thought. Don't go for metrics that don't add value to the business that you're building. Right, you're building startups because you want to build some legacy behind you, or you want to solve a large problem. And if you're doing the startup for those reasons, then be very sure about what are the right metrics that will show that you're doing the right thing. If you go behind the wrong metrics, like, hey, what's the valuation, what's the amount of funding that you have raised, or some other vanity metrics, then eventually in a few years down the line, you would look back and regret why you did what you did. But if you choose the right metrics, and no matter how it turns out, you will learn a lot from those few years of experience.
That is great. Thank you so much, Abhishek. I think, by the way, wish you a very happy Diwali. I know it's coming up. And I wish really the best for Plum. I think at some point I'll be writing an article about how you're in my anti portfolio too, and probably co-author that with Ashish. But we'll secretly wishing for you to go on and keep scaling the heights. Thanks a lot for your time today.
Thank you so much, Anirudh, for having us.
Thank you, everybody. We'll see you guys next week.